Good morning, Lagos. It's time for us to talk business inside the world of Business Express, and Rotus is live. Good morning.
Good morning, sir. Good morning, Lagos City.
Good morning. Good morning. We have a wonderful analyst in the house with you,
Bumi.
and
Hi,
Dolapo.
Lagos.
Hi.
Bumi has a cold. She's a warrior.
She
But
does.
she's in it on YouTube, so you can see how lovely she looks.
Bumi, try saying fine.
Don't mind,
I
bro.
like. I just like.
What
the
is
sound.
guaranteed me that you guys will manage my voice?
Exactly. We shall manage it.
Please manage.
Because we're happy you're
Sorry.
here. We're happy you're
You're not
here.
going to say it now. You probably say it at the end of the show. Anyway, Lagos, join the conversation. Send a message to WhatsApp 0809 444 That's 0809 444 The hashtag on Twitter is Business Express 981.
Thank you, sir. We're not even going to spend much time on the markets. Yesterday was, 0.1%. I mean, it was pretty much flat. 41,172.82 points. Sorry, close. We're at 21 gainers, 18 losers. Eternal PLC top gainer. Unity Bank top loser. 362 naira to the dollar is where we're at. Bumi, I'm so glad you're here. Can you manage? Just manage. We'll manage. We'll make it. Can you take us through the money market activity from last week?
Okay.
Yeah.
So I want to first give you a rundown of what happened within the last 2 weeks before I just churn out the numbers.
Yeah, that's fine.
Okay. So pretty much, we think that the Monetary Authority are giving us mixed signals in terms of where they think the marginal rates should close at for the OMO auction.
Okay.
We've seen that at the start of the year, stop rates were at 14%, and then slowly but progressively they had been dropping the rates until it reached about 11.95. We thought 11% would be the anchor until they all of a sudden started raising stop rates up again. From 11.95 it went up to 12.05, and then the last stop rate was at 12.1%. Then in terms of liquidity, we thought that the comfort level for them was about 400 billion in the money market.
Okay.
And so they had been mopping up consistently about 500 billion, leaving about 400 billion in the system. But the last auction, we saw them take out a whooping 600 billion, leaving liquidity at about 200 levels. So the question is, are they focused on rates or liquidity?
Okay.
Do they think 12% is more of an enticing rate for foreign investors than the 11% levels? On the contrary, the fiscal authorities have been more consistent. NCB stop rates have been consistently lower. They've sold a lot less than what matured, which is in line with what they had already promised to do.
Okay.
So we have no doubt about the direction for the fiscal authorities. But for the monetary authorities, we're not sure yet. We're anticipating that by this week's OMO auction, there will be some clarity as to what they're trying to achieve. But I don't think any trader will be taking any long-term positions at the moment until there's some certainty.
Some clarity. Okay,
So,
cool. All right, so now the figures, yeah?
Okay. So opening liquidity was about 453 billion. We closed at about 246 billion, sorry. Rates traded between 2 and 5. Inflows into the system included OMO maturity of about 314, then an NTB leftover of about 95 billion. Outflows 600 billion that I already mentioned, and then a 90 billion for FX. This week there's an OMO maturity of about 290 billion,
which we expect them to clear out
exactly.
once it comes in, right?
For securities, things were pretty bearish at the start of the week, also because of the public holiday.
Okay.
So we didn't really see much activity until Wednesday. Things started bearish because of the results from the PMA auction.
Right.
Yields dropped by about 10 to 35 basis points because the stop rates came out lower than the previous auction. Stop rates came out at 10.95 and 11.149, which is the lowest that's been this year.
That is low. Yeah.
But the sentiment reversed the following day on Thursday because of the OMO auction. I think the market already anticipated that stop rates will be higher for the OMO auction than the NCB, so they already priced that sentiment in, and we saw just by the announcement of the OMO auction that yields
we're going to be going up.
Went up by about 25 basis points. So things were pretty much mixed. I think will be still mixed within this week. For the bonds market, things were pretty much flat because most traders in that sphere were not really certain of the direction of CBN, especially because of the inconsistencies they've displayed with the stop rate. So we anticipate that they will still be cautious this week. That's about it.
Wow, 10%, from the highs of, what was it last year? 18, 19, with the true yield of almost 20-something%. All right, let's go to our question that we got yesterday on Twitter. We couldn't answer it. I can't remember who sent it, but it was about, okay, Forte Oil is pulling out of Ghana. Is there fire on the mountain? I remember that specifically yesterday. Dolapo, Oga, what's going on? Let's clear the air with Forte Oil pulling out of Ghana. Is there fire on the mountain?
No, there's no fire on the mountain. First of all, the contribution of the Ghana unit is very minute. It's about 7% to both top and bottom line.
Okay.
And it has been a loss-making unit for the past 3 years. They've always been making losses.
Okay.
And there are about 10 outlets in Ghana. So the whole plan is that they want to sell it off. They might not even get buyers for it on time. They also want to get out of the power sector. They want to get out of the Emporium Limited, which is
here in Nigeria,
which has a stake in the Girugu power plant in Kogi State. They also want to get out of upstream and use the money to restrategize and expand the downstream business astronomically. The bet is that by the time something like Dangote refinery comes on stream, and to a large extent that sector becomes deregulated, that they want to be in a position to leverage on that.
Okay, so for Forte is they're pulling out of upstream and they want to focus on their
upstream power in Ghana.
Upstream power in Ghana, yes.
And use the proceeds to focus more
on downstream,
which is the traditional business.
Okay. So I mean, essentially, like you said, there's no fire on the mountain, no really reason
the
to
problem
panic.
with Emporium or the Girugu is that they have a lot of receivables from the government.
Right.
You understand? So receivables that the government is owing them.
Owing them money.
You have a lot of money, but you haven't really taken
the cash is not there.
So they said, look, let's go to where we can get money sharp.
Okay, we're still sticking with oil and gas here. I wanted us to get to corporate bonds in a second, but we will. I just remembered. We're getting an announcement from your guy, Oga Trump. Today.
That's my homeboy.
Your homeboy. Can you help explain to our listeners? This is, I think it's on the Iran deal.
Yes.
Okay. Now, okay, go ahead. So
there's basically a deal with the Obama administration where Iran was supposed to have stopped their nuclear ambitions, in exchange for cash and also lifting of sanctions, which means they could now export crude oil.
Right.
But right now, Bush is reconsidering.
Not Bush, Trump.
So Trump is considering. That's
the other guy.
He's considering basically the fact that Iran is becoming a threat in that region.
Yeah.
So the major players in that region is Saudi Arabia, which usually aligns with the US, and also Iran, which aligns with Putin.
Right. With Russia.
So and it's also sectarian because the Saudi people are basically Sunni Muslims and Shia. Iran is they're Shia Muslims. So and they're also saying that Iran is stretching their political influence, especially in Syria and Yemen. I know Yemen and Saudi are mixing it up right now, so they want to curtail Iran's
what's happening
and
there?
the best way, basically, because political and for national security, is to make sure that they give them some sanctions. So it's not really that they need anything bad, but they just want to boost Iran's.
But oil prices have been, and as far as what we are concerned with this, oil prices have been reacting to this impending decision. So they've been going up recently with regards to that.
Bush, the White House made an announcement.
You keep calling Bush.
Sorry, Trump. They're my guys. Trump made an announcement that by 2 p.m. American time, he will announce whether they're going to get out of the Iran nuclear deal or not. So mainly he made the announcement. Commodity traders in America started profit taking. So the price of crude oil went down yesterday. You understand? So basically, once the announcement comes today, we'll know. But the bet is that it's most likely going to pull out of that Iran deal. Probably renegotiate it because there's some tech notes that by 2025, Iran can have the option of selling. So he says it's not going to have that.
So I have to keep an eye. What do you think?
Yes, I agree with Dolapo. I think the market has already priced in the fact that the worst case scenario is that America will pull out of the deal, because WTI is already at $70 per barrel, which hasn't been the case since 2014, and the Brent crude is at $75 per barrel. So the only thing that can change or bring down those prices now is if he postpones the sanction or he pulls out. Or he stays in the deal. In the deal, exactly. So I also think that. I don't think he will stay in the deal. There's this program on CNN. I think it's called GPS.
Yes. Fareed Zakaria.
Exactly.
Yes.
So he was interviewing someone who said America already has intelligence that Iran might not be exploring nuclear weapons in their own country, but they're using North Korea already as a front. So they're still doing it. So if they know that, then why would they want to stay in Nigeria. My personal opinion.
Interesting. Okay.
We have a question in rather comment from Damilola. It says, I noticed that there was a sell-off in the bond space on Friday last week and yields inches higher.
Okay, all right. I think we already mentioned that in your roundup.
Yes, that things were pretty bearish.
Yeah.
Most people were selling off. But bearish means that the market was selling off, especially as there was no clear direction as to where CBN wants to take yields because of their
inconsistent in monetary policies and money market space. Okay, cool. Speaking of which, thank you for that question, because we're actually moving to corporate bonds now. Real quick, this headline here, I think it's coming from Bloomberg, says record bond bonanza awaits Nigeria as firms flock to raise debt. So Bunmi, what are we looking at here? It seems like we could be seeing some firms looking to borrow money in the bond space, corporate bonds,
corporate bonds.
Yeah.
Yes. The atmosphere is right.
Okay.
Interest rates are lower now because federal government is now borrowing externally rather than in the domestic space. So there's more liquidity for corporates to actually take this opportunity to raise capital from the debt market. Apart from that, the economy is looking pretty good. IMF predicts that GDP should grow to about 2.1%.
Right.
I think from your last show you said purchases managers.
The PMI,
is about 59.
Right. That's
now.
right.
So
right.
It means that there's expansion in the manufacturing sector. So if there's expansion in the manufacturing sector, it means they possibly are employing more. If they're employing more, purchasing power is more. If purchasing power is more, demand is more. So there's a motivation to produce more. So it's a cycle. It's good. So I think most manufacturing companies will want to increase their capacity to take advantage of how the economy is growing and to meet possible increase in demand. So that's for the manufacturing space. So we see that we anticipate that manufacturing companies will come in to raise debt. We also think that the financial services sector should come in to raise debt. One of the reasons I think they might come in, especially the tier 2 banks, is because they possibly are they are implementing IFRS 9.
That's right.
You understand? So they're going to have to provide more for their loans. So you will see that loans that were not previously provided for might be provided for. Loans that were non-performing before might be written off totally, which is definitely going to affect their capital. The only way to tinker with this is either to reduce your loans or increase capital.
Okay.
So some tier 2 banks possibly might want to do this as they come to the market to raise debt. They might also want to raise debt just for possible funding is to be able to lend more and for a longer period of time.
Okay.
So the question really is, should individuals like you and I invest in corporate
bonds? Yeah.
So if you're looking at a higher yield than what you're seeing in T-bills and bonds, then yes, a corporate bond might be just the thing for you. But you want to take note that for corporate bonds, for bonds in general, it's a longer term. I don't see any corporate bond coming out for a shorter tenor than 3 years. So it means that you're going to invest your money for that length of time. There is also a secondary market, I think, that's provided by the OTC, the FMDQ OTC trading platform. You possibly will be able to get at least a reference code if you want to resell the securities in the secondary market. But how liquid it will be, I'm not certain. It will not be as liquid as FJM bonds, definitely.
Right.
So I do not know the ease at which you'll be able to offload
if you need to sell.
So do consult your
broker.
your brokers
before you take the step.
Yes, look at the prospectus and
go for it. Dolapo, your thoughts on
first of all, we have to understand why.
Yeah.
Why corporate bonds now coming out? The reason is because the government last year decided to borrow in FX, basically float euro bonds and reduce domestic borrowing. So which has freed up the debt market for the private sector.
Right.
And on the macroeconomic levels, everything is looking very, very good for the corporate guys. So you have inflation trending down, PMI is high, GDP is positive, so everything, interest rate is generally down. So that's good. So corporates are now borrowing, and that will spur growth. So already we're hearing that Dangote wants to raise 50 billion this year. CNI wants to raise money. So it's good because it shows that, once the corporates are now having more predominance in in the debt market now. It shows that the economy is on the way, is on the mend. So it's good for everybody.
But federal government
also down,
borrowing money to the federal government is much less risky than the corporate.
So it crowds out the private sector.
So guys, keep in mind. All right, that's all the time we have for today. Dolapo and Bunmi, thank you guys so much for joining us today. And Valentine,
thank you. And now we're finally out of the bush into the city. Thanks, man. Thanks, Dolapo. Thanks, Bunmi, for coming through. Lagos next is Muyiwa Falabi with Frankly Speaking. Keep it here.
Business Express on Smooth.
Excellent stuff.